Jim Lebenthal, you bought more Disney, and I find that pretty interesting. What sort of statement that makes about maybe the overall picture, what it says about your belief in that company's stock?
Yeah, well, look, I think the company is fabulous. I think I've said this for some time that it's a hybrid. It's got the reopening trade in it with the theme parks and studios. And then it's got the streaming business, which I'm not going to call a stay-at-home business, Scott, because this is a business that I think we all believe will do well regardless of whether we're in a shutdown or not. By the way, I don't see any signs of us going into a shutdown anytime soon. But high-quality company, I think. What I'd really like to point out here, Scott, is this is continuing a tactic that I've had all year of finding those stocks that are great companies, but whose share prices have corrected and languished. So we know that Disney's stock price absolutely killed it after November, right? They had that earnings report followed by the December analyst 4-hour meeting that was just chock-a-block full of content. Stock rallied into March, and since has consolidated and paused. That's where I want to pick up more of it. Just like I picked up more Apple in March, just like I picked up more Viacom after it came down after Archegos. That's my tactic right now. I think we're in a secular bull market. Pause for that to take hold. And then within that secular bull market, you're supposed to overweight those stocks that look like they're going to come out of a consolidation/correction soon. That's Disney to me.
I hear you. Highs of the day for DIS. 203 is the 52-week high. Not all that far away from where the stock is now. By the way, JP Morgan today reiterates Disney as its top pick. It's about theme parks, movies bouncing back, driving the share price higher. As you can see, shares again on the move today. Interesting, Brenda, this was one of your picks in our stock summit not all that long ago.
That's right. And I agree with Jim that, I think this stock is poised to come out of this consolidation that it's been. And as I said during that stock summit, I really think Disney is one of the few companies that's going to come out of this being much stronger than it was going in terms of now the streaming business, over 100 million subscribers, incredible content, a return of traffic back to the parks. So I think there are a lot of reasons to be positive about Disney. So the fact that it has done what it's done this year is a little bit perplexing, but I think it's created a great opportunity to get in.
Yeah, I mean, it's come so far from where it was off the bottom, then a bit of a stall. But we are looking at a reopening story that could be beneficial to those shares going forward. All right, Steve Weiss, in a market where we're once again debating growth versus value, cyclical versus growth, et cetera, you bought more or you bought Taiwan Semi again, right? You had owned it. I think you at least sold most of it, if not all, and now you bought it again. What's the story there with you?
Yeah, I did exit Taiwan Semi slightly above where it is and bought it back. Stock's been consolidating since March. And I think what we've seen since that period of time, matter of fact, the entire year, is that this is a critical company with the semi shortage, which isn't going away anytime soon. Taiwan Semi, which is the #1 foundry in the world, has become more and more important. Yet, the stock's been flat. So while you've seen the other semis move up, while you've seen technology recover, reach new highs in a lot of instances, this has been left somewhat for dead. However, they keep reporting numbers. So they report monthly revenue numbers. They'll report their quarter this Thursday, and the monthly revenue numbers have been very, very strong. And unlike a lot of other companies that are reporting strong numbers this year, they're based upon poor comparisons from COVID. Taiwan Semi was never like that. Through COVID, they did quite well because while others shut down, they continued to pump back and do well. And yet it's not getting credit for that. So I believe at roughly a market multiple on forward earnings that this stock is compellingly cheap. It's like utility, except it's a utility with pricing power, with innovation. So I see the risk is very, very low, and I think it should get re-rated higher. There's a lot of the street that's still holding it, just saying hold, and doesn't even follow it, or it's followed in Asia. So I think it's a great opportunity to buy this stock, which is going to perform for years to come.
Okay, so we're just off the highs of TSM as well, and we'll keep our eyes on that one, too. Now, the other interesting move of the day, just given the kind of week that we're entering in, where banks are going to kick off earnings season starting tomorrow, is Joe, you bought more Goldman Sachs. And I think that's very interesting, just considering where interest rates have been where they are today and the fact that these companies are going to start reporting their numbers. Why'd you do this?
So this is a great conversation because for those of the viewers that don't believe technicals work, they absolutely do. You are in an environment right now where you're waiting for earnings. There's not much to rely on for fundamentals. So as Jimmy's talking about Disney, Scott, I'm looking at it on a chart. That's a great trade. It's right against the 200-day moving average where it held. The same story for the trade that Steve has in the SMH. Now I go to Goldman Sachs, and I'm relying on the technicals here, Scott. 100-day moving average got challenged at 350. It held absolutely perfectly. In the last 5 days, while you're seeing Citi, Bank of America, Wells, all down, Goldman Sachs has had relative strength. It's actually higher over the last 5 days. So I also think there's a technical trade that reached its capitulation point in Treasury yields last week. We perfectly held the 200-day moving average at 123 for a 10-year. Playing that recovery on Friday, I wanted to increase my exposure to financials. It was based on technicals, and that takes me right back to where I'm most confident. One of my favorite names, Goldman Sachs. I'll buy it, add to it all day long, heading into earnings.